All right. Looks like we're up. All right, thanks. All right, so not much over there. We didn't find anything in the majors. Let's hope we find something in the exotics, okay? Aussie yen, all right? We got a big pennant here, and this pennant should go down, not up. We have a breakout up right there, as you can see, but it's short-lived. They are already driving it to the downside right there. On the UG, let me see. Where is it? I don't know where it went. Uh, that was for the, I lost it somehow, Larry. That's strange. Let me go find it. 120, 117. Find the 5 o'clock candle right in there. We put the high in afterwards right there. Going down for 117. 117. Yeah, we got room down here. Let me get a fib on here. Swing high, swing low, swing high. All right. 1,000 and the ATR are right there together. This is not bad. Got a little channel working. Let's go ahead and put the channel on. And it's real small right now, as you can see. It's bigger than that. So it's coming over to here. Right. Now that's not really support, right? Because it doesn't match the criteria, but that's what they're using. So yeah, so you got to prove the heart line. Prove the heart line. I don't have a heart line on MT4. Then you got to use Andrew's pitchfork. All right. All right. If we can break this bottom, we have over 55 pips there. So we need a break hook and go there. Let's go see what the Three Musketeers say about that dollar yen again. Sorry, I'm regressing here. All right. So they say, all right, we're trying to go down. We're trying to go down. We're still going up. We're going down. We're going down. We're going down. We're going down. All right, so now we see the opportunity. Thanks for the heads up, Larry. It's below here. Got to break, take that support out. All right, so we'll hold to the 1270 target. We'll move our stop at the 1,000 and the ATR right there and hold for the 1270. When we get a break hook and go here, this is trade one and this is trade two. Right, see that? Yeah, let's go look at it. That's a good idea, Robin. Thanks. All right. So one of the things you might want to have as one of your resources is a link to the indices. All right. Because then you can find out what they're doing, what the technicals say about the yen. All right. And here's the yen down here, and it says the yen is a sell. All right. That means dollar yen means it should buy. All right. If you're selling the yen part, then the dollar should go up. Right. So as you can see, it's nasty. It's very inconclusive. Right. So if we get this trade to the downside, all right, this is trade one, this is trade two. How do I trade it? I trade one with 1/3 of my lots with 3 times the stop way up here, all right? And I trade two with 2/3 of my lots. When trade two goes in, all right, this stop has to be moved to break even or positive. Then you trail them all to here. When you get close to the target, it goes to a 1-to-1 risk to reward ratio. I'm 8 pips away from my target. I move my stops 8 pips to 8 pips away. All right. But I don't exit because I'm holding for the target below that in case it does that. And how do I decide what to do? If I have little candles like that, I exit these 2/3 and put them in the bank and move my stop and hold trade one for that target. If I have big candles like that, I hold all 3 of them to go to the next target. And if I hit that one, then I want to go to the next target. All right. That's it. So it's pretty simple. Don't make it more complicated than that. And what happens is that you are trading as riskless as possible. All right. There's no such thing as going, I can trade 3 minis today. I'm going to put 3 minis on that. Don't do that. Don't do that. Enter with 1/3 of your lot. Stick your foot in the water like you would if you were in Michigan in March. All right. See if the water's warm enough to even dive in. All right. Now, if you take a loss on that, it's only on 1/3 of your lots if you get it wrong. But if you get it right, you're going to make it with 3/3 of your lots. All your lots will be in play. All right. And that's how you make money, folks. All right, back over to Aussie yen. We're waiting on this Aussie yen. See if we can. It should go down with this pattern right here. All right, MACD starting to make the turnover. Three Musketeers. They say, what do they say? We're going nowhere. We're turning it down. We're turning it down. We're going nowhere. We're turning it down. We're turning it down. All right, chart says we're going down. So you go with the chart. All right, no matter what it says, you go with the chart. All right. The chart is wrong or right. All right. But you're waiting for it to prove that it's right. All right. All right. Aussie yen ATR is only 66 pips. So let's even see if we have an opportunity. 5 o'clock candle is there. There's the high afterwards. Remember, the ATR is going to be the day chart high and the day chart low before it happens. All right. That's why you use it. I want to know stuff before it's going to happen. One of the few things I can use is the ATR that tells me what's going to happen. What's the only other thing that tells me what's going to happen? The MACD. Everything else is lagging, right? So you only have two things you can use, an ATR and a MACD. Don't make it more complicated than that. If you got more crap on your charts, get it off of there, right? It's not going to help you. They're lying to you day in and day out. I'm going to take this off right now, and we don't have 55 pips left. All right. Now, if it bounces and goes back up, will we have 55 pips? So I'm going to go find out where that is. I'm going to the target. I'm going up for 55 pips, and it's going to have to break here all the way back up here before I get a trade. And wherever this stops is where trade 2 is down here. Pretty dicey. I'll put a question mark on it. We'll come back and see a little later what it looks like. But right now, it's not tradable. But it's got a candle moving, man. Yeah, it's got a candle moving. You're Aussie. All right. Blog post this morning. Looking for it to go up into here. All right. We'll see if it does. This pullback is actually nice for us, especially if it pulled back to the day chart bottom and bounce. All right. But if it pulls back to the day chart bottom, you're going to figure out, you're going to be going, man, maybe it's turning to go down. So again, it's a tough, everything's in a tough position today. All right. All right. MACD, though, is telling you we're trying to push up. We are still a seller because we're below the zero line, but that doesn't mean we sell. It just means we're officially a seller. But any movement to the upside will break the MACD to the upside, and there's the T3. Once the T3 and the MACD are broken simultaneously, it's 82% going to go in that direction. Let's go see what the Three Musketeers say about it. Three Musketeers say, all right, we're trying to turn it up. No, we're going down. We're trying to turn it up. We're going up. We're going up. We're going down. We're going down. All right. So this conflict is because you got up and down moves in the flag pattern here. Okay. Thanks, Larry. All right. So right now I'm going with the buy. All right. To the upside. All right. And we'll see if we get a bounce. All right. So Euro Aussie on a bounce, maybe. We'll see. All right. That is the ATR, 109 pip ATR. All right. Over to Pound Aussie. All right. Pound Aussie shows the breakout pretty well. We had it down yesterday. Let's get rid of that. Let's get rid of this. All right. I've got to get rid of everything. It's to the downside, the channel. All right. And when you're in a range, you don't have to go redo all your stuff because the range is already in play. It's been going on for like all that part. It's actually been going way, way back here, as you can see. All right. So, all right. They moving the, yeah, they know that fibs. They know that fib. They know that fib. Okay. Leave the fibs alone. All right. Now, here's the potential. This could be an ABC for the sell, close in reverse to the downside, big bull bear flag. All right. Or it could be a 1, 2, 3, 4, 5 to the upside. MACD tells you you're a buyer. All right. So it says look for the buy. You can look there and see the bulls got it. All you got to do is look at it and say, oh my gosh, the bulls are definitely here. All right. So how do I prove it? See, this is where you get dead on other charts. You're dead. You got to guess. We don't have to guess. We go down here to the Three Musketeers and they go, yeah, we're going up. No, we're going down, but we were going up. We're still going up. We're going up. We're going up. We're going down. We're going down right now in this little pullback here. All right. So it's pulling back. All right. So we'll see. All right. All right. Ooh, just nasty, 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 nasty. All right. Now, Pound Aussie is correlated with the dollar, but the last 4 months or so, they have been doing exactly the opposite of that. So they will change as they want to change, and you got to be on top of it. All right. 109 pip ATR. We're tentatively going with the upside, but I'm not convinced of that at all. But that's what the chart says to look for. So that's what we're going to look for. 1600 right there. We put a low in after that right there. Going up for 109 pips. 109 pips. And there we go. And you see we don't have any room anyway. So it's a good thing. Walk away from it. Got to have 55 pips or more. If you don't have 55 pips, neither does a banker. And he has a rule that says he can't trade unless there's 55. He cannot put a position on less than 55 pips. Now, the market maker will do that because he's the market maker, but the follow through can't. All right, Euro New Zealand, big sideways move here. As you can see, that'll be a flag down on the 10-minute chart right there. Right, so you can see it. All right, flag to the downside. All right, so how do I get in the flag? I got in the flag like this. All right, so that means I'm coming out like this. So the target's down here for the flag, as you can see. All right, there it is, sideways move. All right. Gosh, and they do rocket science, don't they? They don't do rocket science. All right, become world class. Takes 100 hours to become world class in rectangles. Once you're world class, they do them all the time. You can make money. You can earn while you learn the rest of it. We just hit the bottom of the range. They obviously respected it and bounced right off of that thing. Here in New Zealand, 124 pip ATR. Find the 5 o'clock candle from yesterday. We go up to 60 again. All right. 5 o'clock candle from yesterday. Where are you? 1600, 18, wow, way up here. 1400, 1400, 1600, right there. All right, so we put a new high in after that, which was this one on the 1700 candle. We're going to go up to that, take that, go 124 pips to the downside, and there's the target. All right, now you can clearly see that we've got an opportunity here. Let's go find the fib, swing high, swing low, swing high, right there. And there's the 1,000, okay? So now we know what to do, all right? If we get the trade, we need a break hook and go here. We already got the breaks, so I'm gonna go down the 10-minute chart in just a second, but it's easier to see up here, all right? So if we get the trade, all right, this is the opportunity right here, all right? So we will trade, break hook and go here is trade 1. Trade 2 is here, all the way to the target. You move your stop at the 1,000. There's only one place in there to move your stop. That's the 1,000. Then when you get close to the 2.618 in the ATR, remember it's a 1-to-1 risk to reward ratio. Trade 1 in the head, trade 2 in the body. There's the snowman. That's the best thing we found so far, right? To the downside. Really looks pretty nice, all right? All right, we'll see, all right? Now, let me go to the 10-minute chart, and you can see that break and the hook. There's the break and the hook. Say, wow, and look at that. It's so easy to see right here. Yeah, there's 96 versions out of 100 of them. All right, but as a break, the breaks to support in the direction of the trend, then the hook back up to support, and then go again. All right, now, as you see, they lost the bears. All right, because the bulls got a chance here. If the bulls don't get out of here right now, they won't get to their option contract up above. All right, so they're going to fight it here, all right? But the bears will most likely win, all right, because MACD is already going down. That means you have lots of participants going to the downside, all right? We'll see. There's the opportunity. You like the trade? Place the entry order now, all right? Entry order will be below 75.90. I put it at 75.86. 2 lots for that target at 75.29. 60 pips. Those 2 lots will make you 120 pips. Trade 1 up here will make you an additional 30 pips plus 60 pips. That'll make you 90. 160 and 90 is 250 pips on this trade. All right. Are you interested in 250 pips? Well, I only get 5 or 10. Then pay attention. All right. We're looking at about roughly 250 pips reward there if it goes to target. All right. Hey, Jacob. All right. Pound New Zealand, all right, should be showing the same thing. It's trying, all right. There's a pullback to the downside. Had that yesterday. Let's go see if we have any room left. Pound New Zealand and ATR is 135 pips. We go find the 5 o'clock candle from yesterday, 1600 right there. And we put a high in after that right there. And we're a seller for 135 pips, 135. Nice big ATR. Plenty of room here. We got to trade it on the, it's got to prove it can come out of the range. As you see, when they hit the range, they stop dead. They stop dead, which means that's a bounce point. Let me get rid of this now. All right. So we got to be below here, and we have 60 pips there. That's all. I need a fib in here. Otherwise, I don't know where to move my stop. Swing high, swing low, swing high. There we go. Wow. They're right on the money. So there you go. So you're going to have to use the T30 to move your stop. All right. That's why the T30s are there. It's one of the reasons. All right. They show you 30 pip movements, and they typically move from one T30 to the other in 1 or 2 candles. right down, right down, right down. See? So when it breaks here, most likely going to that T30. All right, move your stop to break even. Get close to the target, you're good. All right, we do have a channel to the downside, so let's put it on. All right, there we go. And oh, it's a little bigger. How do I know that? Because the heart line's not proven there. See, that's what tells me it's a little bigger. It doesn't help me much. It's all the way over to here. Wow. Come on. There we go. And see, now, see how it perfectly shows you the heart line? All right. That's why you need a heart line. If you don't have a heart line, you're guessing on your channel. Every channel you put on is a guess. Ours are never a guess. I'm now comfortable with that. All right. Why? Because I've done, I don't know, 80, 90, 100,000 channels. All right. And when they prove the heart line, they're right on the money. All right. All right, so there's the opportunity, pound New Zealand. It's barely enough, but it is there. The euro New Zealand is a much better trade. Right? Over to New Zealand yen. All right, New Zealand yen breaking up. Let's see if we have any room with that movement there. All right, New Zealand yen, 58 pip ATR, probably not. 1600 right here. 1600 is there. The low is right there on that wick. We take the wick, we go up for 58 pips, 58 pips, buy, and to the pip, done. See that? See how they exited right there? See that? Bulls were trying to drive it further, but all the exiting overcame them, and they took off to the downside. It's already done. Aussie Swissy. Can't trade it. Why? Because we have too low an ATR, only 40 pips. Can't trade the Aussie New Zealand either, only 45 pip ATR. So you're never going to get 55 pips out of those currencies, all right, for now. They used to do 70 or 80. Nobody knows why the ATRs are low right now. These are the lowest ATRs I've ever seen in the winter. That I've never seen them that I can recall, all right? And what does that mean? It makes it tough to trade low ATR currencies. And if you don't know that you have a low ATR currency, for instance, the Aussie, which normally trades 85, 90 pips a day, is only doing barely 55. You work your chart, you work your charts over here, and then you place the trade in your broker's chart. Right? That's it. Now, if you're using Erica, if you're using FX Synergy, they actually created a little widget for us that we can pop up and put it right on the chart and trade right from the chart if you're using FX Synergy. Right? And the reason for that is that we would have to have an API feed for every single broker, which we don't. So, and it would be virtually impossible to do so. All right. Now, another thing to remember, if you're using MT4, MT4 has massive, massive temporary file leaks. All right. Massive, in the tens of thousands a day. So, if possible, and you have an old laptop somewhere, put the broker's platform over there. There's a on the Academy, there's a whole there's a thing on it. You can go look at it, Jacobus. Then we get a 20% discount. So you can rent it by the month or buy it, a lifetime warranty. I have a lifetime warranty, and I love it. I've been using it for 10 years. But there you go. All right, let's find out where this is. Oh, back to that. So if you have the ability to put it on a separate laptop, right? I have mine on a separate laptop. It's an old laptop my wife had that she hadn't been using. I just cleaned it up and put it on there, and now it's over there. It's right by my right hand. I can move right over there and get it. But I'm not causing temporary files to file in here where I need speed. I need candles to form at the speed that they're forming. All right, so I don't want a bunch of temp files. All right. There we go. Pound Swissy. All right, what we got? 57 pips. Hard to trade that because wherever it is, it's already done it. See, 1600 right there, and that's the wick below it right there. We're going up for 57 pips. 50. That's all. See, 57. Why is mine defaulted to 55? Because unless I have 55, I don't have a trade. Already done, as you see. All right. So out of all those currencies, what we found on the majors, we only found one, which was the dollar yen, right? And we're going to have to break this bottom. And as you can see, they have not broken that bottom yet. All right, so we got to break that bottom for the break hook and go. Trade 1 is there. Trade 2 is the break of the 618 for the target. Hold for the 1270. Hold for the 1.618 down here. All right, so there you go. Not happening. In fact, we're going the other way right now. All right, over to the exotics. Question on the Aussie yen. We'll keep trading it because it's one of my favorite currencies. And we have plenty of room if we get this hook all the way back up here. So let's watch it. If we get a hook all the way back up here, all right, you can already place the entry order now for 96.42. You can put it in right now, 96.42 for that trade down there and 96.14. All right, 2 lots below 9 at 96.42. All right, put it in now. Wait for the market order. What if it takes off and goes? You're going to press your winners because you have two lots with entry order down here. All right, that's why. So you get it, but by doing so, it's proven that it's going to try to make the move. All right, over to Euro Aussie, need a bounce, and we're getting one right now. All right, so there's the bounce. Hasn't proven anything though. Let's go up to the chart. Let's make sure we got 55 pips. And we do have 55 pips. All right, so there we go. All right, so break, hook, and you can see the trade. Trade 1 is here. And trade 2 is here. See, this is why it's important to get your fibs on here because they tell you where the next barrier is, and the break of that barrier is the opportunity. The space between the barriers is uncontested. The space at the barrier is contested. It is contested. It's going to be contested. It's going to be contested. That's where you want to be. That's where you want to be. See? All right, you can see all you got to do is go in the past and see it. Okay, that's contested area. No problem right there. Here's a contested area. No problem right there. See, all you got to do is spend time in the charts. And by the way, for those of you new here, hopefully, for every 1 hour you trade live in the market, you need to spend 3 hours in the past. It's a 1 for 3. All right, well, that's a total of 4 hours a day. Will you do it? No. You won't do it. You'll do the hour and a half trading. Yeah, you'll do that because that's fun. But the work part, you won't do. All right. Because you got a PTA meeting, you got to go protest something, you got to go, vote, you got to, whatever you got to do. All right. We got a life. And that's why you have to maximize the time when you're in front of the charts. Not only are you trading, you're also working in the past, working on trying to get better. All right. You can be world class in anything that you do for 100 hours. If you stop and would do 100 hours of flags, you'll be world class at trading flags. And the market does flags all the time. And then I go to pullbacks. Does the market do pullbacks? Pullback, pullback. All right. Pullback. All right. Then I become world class at pullbacks. Now, I'm world class at the things that the market does every single day. Wow. Now I can learn. Now I can make money while I'm learning all the other stuff. We're going to change that to here and watch for the breakout to the upside. All right. Over to pound. No, pound Aussie's off the table. Euro New Zealand. All right. Euro New Zealand, we're waiting for a breakout down. As you can see, not getting any sort of idea that that's going to happen. None at all. Pound yen, yeah, we already looked at it. There's nothing there right now. The reason there's nothing there, Jaco, is because they did virtually almost all their ATR but a couple of pips to the upside. So is it probable that they're going to do the ATR up and the ATR down? No, it isn't. Is it possible? It is possible. And it does happen quite often. Right? But it's not probable. And we don't trade possible, we trade probable. All right. So there you go. This could be nothing more but a pullback to go again. All right. So if you were convinced of that, all right, to the upside, you could make the trade if you have 55 pips. Let's see if we have 55 pips. All right. Sell for 55 pips. And we do have 55 pips. All right. Hold on. So let me go back here. We have 55 pips on this bounce here. All right. Well, but see, MACD says you're potentially a seller down here. All right. Golly, that's a mess. See, it's a mess. You have too much conflicting information. All right. MACD says down. This says up. All right. This says we went up and we almost did the ATR. All right. Well, if they did the ATR, it might be over. All right. They respected that fib right there and they couldn't make that trade because there's not 55 pips. So no wonder they didn't make it. All right. It's just a mess. It's just a mess. All right. And I want to trade messes. I want to trade things that are really easy. I like easy. Cherry pick them. All right. So we'll watch and see if we get the turn on that Euro New Zealand. Not showing any sign of it right now. Pound New Zealand, we got to break this range, and that's going to be hard to do, folks. That range is pretty strong, as you can see. All right. So breaking the range is what you got to do. So you don't trade into the range bottom. You trade the break of the range bottom. Andrew, there's Andrew. The best way to achieve success with target trading is to follow the rules and never break one. If you break one, you'll break another. Less than 10% of traders are successful trading in the forex because they either don't follow the rules or don't know the rules. There you go, Andrew. Exactly correct. Can't say any better than Andrew said it. All right. In fact, can I steal that from you, Andrew? Okay, thank you. That's great. I'll save it for after class, and I'm going to add it to the rules page. That's awesome. I can't say it better than Andrew just said it. I can't say it better than he said it. So pay attention to what he said. All right. All right. So there's really not anything on the horizon right now that's going to happen really quickly. We got to move down and break the bottom there on that yen. Not going to happen right away. Aussie yen, we're still waiting for confirmation, and we need it to get high. All right. The problem is if they get all the way up to here, all right, you're back inside the barrier. See? And so it's a difficult trade, folks. All right. In other words, you got to gamble. That's what you got to do. I'm gambling that it's going down. And when it comes up here, breaks back in over above slope support, which is a sign we're going up, not down. You're going to have to gamble and take it there. I'm not a gambler. All right. So as far as I'm concerned, AJ's off the table. And I trade it almost every day. And so because I trade it every day, I know when not to. All right. Today's the day I'm not going to do it. All right. Over to Euro Aussie. And we need a breakout there. We're not getting one, but we got bulls here. As you can see, the bulls are here trying to push it out. It's going to take a market maker to do that. The market maker will push it out, and then the follow through will come through. Who's the follow through? That's the interbank market of over 1,000 banks. Every one of them, the minimum trade on the interbank market is $1 million, not leverage money, actual $1 million. That's why we have a $7.8 trillion business a day, right? So we got to have a breakout there. That's it. A break and a hook and a go. All right. So there we have it. All right. Yeah. The entry order will be above this top right there. Right there. That's trade 2. Break out, hook back down. That's going to be trade 1 right there. All right. There you go. So break, hook, and go is what we're waiting on. Break out, hook back down, trade 1 with an entry order already in. By the way, the number for entry orders is 85%. 85% of all your trades need to be entry orders. Entry orders. If they're not, then you're still trading like a retail person. Where's the trade? Where's the trade? Where's the trade? Entry orders means you plan the trade. You've assessed the risk. You've assessed the reward. You don't make an entry unless you know the exit. You don't make a trade 1 unless you already have trade 2 in. These are the rules. The rules. All right. Trade 2 goes in with 2 lots based on what the chart says is the biggest space in there. All right. If I get the trade, I make a lot of money. I make hundreds of pips, not 2, 3, 4, 5, 6. All right. Not a bad opportunity if we can get it on Euro Aussie. So Euro New Zealand is next. And then we'll do pip captures. We got to break this bottom. We don't want to trade into the bottom of a range. Okay, so you want to trade out of here. But you see, there's a white dot up there. Big boys are trying to push it through there. And that's right. Using entry orders forces you to plan out the trade. Exactly right, Kay. All right, we got a trade down here. We're nowhere close to it at this point in time. And pound New Zealand, we're closer, but we gotta have this breakout. We don't trade into the bottom of range. Trade the break of the range, but don't trade into the range. All right, so there we go. Because it's a strong bounce point. All you gotta do is look in the back, say, yep, they bounced. Yep, they bounced. All right, so there it is. Remember, bankers are creatures of habit. They do what they've always done. That's what they do. All right. So you can see it's pretty clear on this chart that when they get a chance to fall off the waterfall, they just run it. They run it. See that? They run it. All right. When they're going counter trend, it's chop city. See that? Oh, got a little run. Maybe we're going. Nope. There we go. See that? See the difference between this and this and these. All right. All right, so now you know what the currency does. Why? Because the same traders are here at the bank every day, and they're the only ones who can print candles. Bankers. Nobody else can print a candle. All right? So you know that if you get a shot to the downside, it has a good chance of running. That's it. A good chance of running. That's why you spend 3 hours in the past looking at things like that. Learning your currency. God, well, which currency should I learn? The one you win on most often. Why do I do that? I don't even know what it is because I don't journal my trades. Then you're not a trader yet. All right. This is a business. All right. You don't run a business without a P&L. You don't run a business without payroll. You don't run a business without inventory. You run a business with business. This is a business. Part of the business is journaling it all. So you can find your patterns. Gee, last week I moved my stop too quick 12 times. Wow, guess what? You're moving your stop too quick. Now you know what to work on this week. All right. If you don't journal them, you won't know that. All right. I broke my rules. I broke my rules. I broke my rules. Okay. Don't break your rules. Quit it. All right. Let me see if Craig is here this morning. Yeah. Craig, you want to do pip captures? Okay, good. Okay. All right, so every day at 4 o'clock, I'm here for the New York fix, and I tell you, I have the dollar down, right? If it reverses, replot targets in reverse. In other words, if the dollar doesn't go down, goes up, replot the targets, right? So let's look at the dollar and see what it did. It went down, okay? So there we go. So based on that, the alerts that went out, only one of them went. It was really quiet last night for some reason. It was the pound dollar, all right? Where are you? Pound dollar right here, all right? So let me pull it up here. And we only got a little bit of it. We're still headed up towards it. It was a buy at 2608. 2608 is right here. 2608 right there. And you got 35 pips so far of that trade. Target is 126.86 right there. All right, there you go. Okay. Erica, just click on Larry's thing. You're sending it only to me because you have a host and panelists. So if you just click on Larry's name, you can probably send that message directly to him. If not, change your chat to everyone and then post it in here and he'll see it. Okay. And leave it. Yeah, you need to do it as a DM if you can because you put your email address in there and we don't want anybody to know your email address. Okay. So. All right. All right. Anybody in? Pound dollar up. Pound dollar up. 35. Okay. Anybody else? That's not too bad. Second trade's not even here yet, right, Sabitri? So you're up 35 and waiting for the rest of it. The second trade above the fib. All right. Anybody else in it? All right. Only Sabitri. So we only have one trader in it, so we can't count it. Yesterday, we had a live trade on the pound yen and the euro yen. All right, so let me go back over here to 60. So on the pound yen, we traded on the breakout here. It did go about 40 pips or so, and that was it. And then it was dead. All right, pound yen traders from yesterday. All right, you could have got a little pips. You might have got a break even. At the bailout, you would have lost a few pips. All right, break even, 4 pips for Lars. Okay, just a trade that didn't go. All right, trade that didn't go. 72 and 41, 10, and took pound dollar from near the bottom. Okay. All right. So 70 to the downside, Andrew, or to the upside? 72 to the downside. Up. Okay, so we can't. So that's we'll get that in a minute. So hold that. All right. But we'll do it right away here. Where's it? Anybody else in the sell, not the buy, the sell? Where are you? There's JT and Sabritri. JT, where are you? You got to watch it when Craig's here because he makes note of who said they were in it. And then there you go. JT, you got your pip capture? Maybe he's not here today. Let me check. Yeah, JT's here. Uh, yeah, you don't have your, okay, hopefully you're getting it. While we're waiting for JT, all right, so when you miss the bailout zone, you need to go the other way. So there's the bailout zone. We talked about that yesterday. Immediately you go the other way. Andrew traded it up. Who else traded it up? If it ain't going down, that's what the bailout says, then it's going up. Or it's going sideways and you can get out anytime you want. Andrew's got it up. Anybody else traded to the upside? Nobody? Okay. Still waiting for JT on the pound yen to the downside, JT. While we're waiting for you, we'll do EJ. So yours was a pound dollar. Oh, okay. All right. So we didn't have enough traders to trade that, count that either, right? Sabitri's GJ also. Sabitri, all right. Got your pip capture to the downside on GJ. That's what we're looking for. While we're waiting for that, EJ to the downside also. All right, we traded it yesterday. And once again, bailout zone. This went quite a bit further. No, you don't have it? Okay. All right. Robin, there's Robin. 50 and 34 to the downside. Break even for Larry to the downside. Anybody else? You notice Robin did 50 pips on her first trade, 34 times 2 lots. That's 68 pips plus 50 over 100 pips on a trade that didn't go to target. Over 100 pips, folks. Anybody else? EJ. EJ down. Where's the traders who were in it yesterday? God, come on now. Daniel, Chris, Stephen, Chris, 25, okay. Sahid, 148, 67, and 38. So that you had to be in a higher than that. What was yesterday's part? Just yesterday part. Because it didn't go 148 pips. It only went 60. So we can count 67 or 33, but we can't count your 148, Said. 67 or 33, Saeed, or yesterday. 33. Okay, there you go, Craig. Hooray, we can count one. $27. All right. Not very big. All right. All righty, here we go. Then we had a couple of that was it. Then we had once you broke out of the trend here, you could trade it up. Anybody traded to the upside? EJ to the upside. Remember, anytime you break out, it's an opportunity the other way. 28. Okay, Stephen, anybody else? Repost on everyone. Everyone, look down and make sure where it says chat, make sure it says everyone. All right. All you're doing is talking to me, to the host. Nobody sees it. So change it to everyone. And Stephen, if you'd repost that, that would be good. All right. There, Larry, there you go. If you'll private messenger her, Larry. All right. GJ was 40. Okay, good. There we go. All right. So GJ was 40 to the downside on that pound yen. Can we count that, Craig? Nice job, JT. Average 15. Okay. We only count if we have 3 traders or more. All right. because we got to average the pip capture. All right. All right. Then we had session recap from yesterday. We had the Euro New Zealand to the downside. Anybody trade Euro New Zealand to the downside? We're looking for it again today. Yeah, it's just Zoom. So if you're using Zoom, it's the normal one. That's what Zoom makes us do. Then it's Zoom. Peter, 68, 28, 26, and 9. Fantastic. Peter, as usual. There you go. Here you go, Peter, while we're waiting for everybody else.
That ain't working. That's the way you do it. Money for nothing and your chicks for free. Money for nothing.
And the pips for free. Money for nothing and the pips for free. Robin's still in with 34 so far. Okay. Anybody else? 27 for Sabitri. Okay. There we go. All right. So you see, Peter made a great trade at the top. Lots of room. Planned his trades. All those went in as entry orders, and he knocked out of the park. Right. Average 43. Okay. All right. Pound New Zealand. Same thing. It was a down move right here. Right there. Anybody trade Pound New Zealand down? Pound New Zealand to the downside. Okay, nobody in that one. How about New Zealand yen to the upside? To the pip to its ATR. Anybody trade it to the upside? New Zealand yen. Don't get prettier than that. Break, hook, and go. Right out of that, break, hook, and go. Up we go. Flag pattern. I'm a world class in flags, so I know exactly how to trade that. Up I go to target. 3 positions in there. Walk away with 150 pips. Why? Because I know what I'm doing. All right. That's what you got to do. You got to learn how the market actually works. Not what you think it does, but what does it actually do? All right, nobody in New Zealand yen. And last one for me is the pound Swissy to the pip to its ATR plus about 25 more. That means the pound Swissy ATR will go up tonight. All right. Anybody trading pound Swissy up? Okay. All right. If you traded something else, we'd like to see it. We don't count it, but we do like it. Thanks, Craig, for your help as always. Thomas, EA, 57, 38, 21, and 4 in the cell. Nice job, Thomas. Look at Thomas. Woohoo. Remember, trade 2 is 2 lots. All right. So that's over 135 pips, folks. All right. You're gonna see traders making hundreds of pips here. If you're new, you're gonna see them making hundreds of pips. We're not here for 5, 8, 10. I can tell you that. It ain't worth getting up for. All right. I know that because I did it for years. Euro New Zealand, Erica. EN stands for Euro New Zealand. 4 separate positions. He took 4 positions. He pressed his winners 3 times plus the original trade. Yeah, it's amazing. There you go, Erica. All right. Let's go back to work. Here we go. Thanks, Craig, as always. All right. Craig usually does it. If Craig isn't here, Larry does it. So there we go. Let's see. What do we got? We got dollar yen. You got to do anything? Pulling back up. All right. So pulling back up. But we did find sellers. See there? See the wick? We found sellers. That means they're selling in the 10-minute world, and you can see them. They're making the turn right now. Now you got to make a decision. All right. Now you can see you can put slope resistance right across here, right there. And you can see there's a break hook, and you're now in the go part of it right there. All right. Where's my entry order? It's got to already be in below that wick right there. All right. So at 147.62, maybe 147.60. All right. 2 lots. All right. If you don't have those 2 lots in, you can't make this trade. And it's enter when ready. It's enter right now. All right. Why do I know it's enter when ready? Well, what's the chart say? It says we're going down. We were anticipating a break and a hook and a go. We got that. We got exhaustion wick, and we got an arrow, which means more money came in that downside candle than the 6 before that. Well, these are really long. How come this little short one is that big? Because this is a uncontested area. Nobody's going to stop it. That's why. And we're hoping that they do that over here, as you can see. There it goes. All right. So there we go. Dollar yen. Enter when ready. All right, I'm in. Why am I in? Because that's what we've been waiting for. All right. Scott's in. Okay, there we go. All right, over to Euro Aussie. All right. Euro Aussie, nothing yet. Has to break above, hasn't done that yet. We need Euro New Zealand. Now, Euro Aussie says it's going up. Euro New Zealand says it's going down. So one of those is wrong, all right? And GN also says it's going down. We need a turn. We got to be below the range, and we're not there yet. All right. Pound New Zealand. We're closer, but we're not breaking this at all. Until we break here, there's nothing to do, folks. All right. So it's tight. AJ, we still got a question on, and if it's going to be hard, it's just going to be hard to trade this because it's unless it moves over here a little bit. If it moves over here and then pops up there, we could trade it. All right, but not happening yet. It's got a 10. Don't have 55 pips. If it breaks here, we don't have 55 pips, so you don't have a trade. Yeah, but it's 50 pips. Why don't you grab 50? Because I break a rule. Don't break the rules. Right? Well, he's pretty strong about that. Yeah, because it's one of the keys to being successful. If you don't break rules, if you plan your trades, if you live by the rules, if you become a master at one or two things in the forex, you can earn while you learn for the rest of your life. Yeah, Erica, we don't pass people's emails around unless you tell us to. So if you want me to give Larry's email, let me know and I'll do it. I'm getting it so I can put it up there if she said, okay, all right. So I'm gonna private message you, and there it is. All right, there you go. Did you get it, Erica? Okay, good. All right. All right. Thanks, Larry. All right. We're waiting. Surprise, surprise. All right. And if you come from the retail world, you go, well, man, you should be in 10 trades by now, shouldn't you? No, we shouldn't. Nothing has set it up yet. We shouldn't be in any trades. If you're in a trade, you're gambling right now. All right. Except for that dollar yen. Now that's good. We're in the dollar yen because it's enter when ready. All right. Is it going to go? I don't know. I only got 1/3 of my lots. All right. So where's my stop? All right. So on a 10-minute chart, if you enter here, all right. Now I entered on this candle right here. So my risk on this trade, let me get this big here. All right. My risk on this trade is this. The last support or resistance right here, which is right here, plus 5 to 7 pips. So my risk is right here on this trade. Where's my stop go? 3 times that. 1, 2, 3. My stop is above here. All right. Now, in order to go get that stop, they're going to have to go up, break the channel, break the top, and go up here. And if they do any of that, do you think I'm going to let it go all the way up to here? I am not. Yeah, exactly correct. That's why I say it's just a mess this morning because the correlations are absolutely going crazy. Opposite. There's just like there's no rhyme or reason to it. Right. And that's why you sit on your hands. Thanks, Robin. All right, so that's a stop. Now, trade 2 comes in down here, right? For this trade here. So when this trade enters, somewhere this candles go down and goes, okay, and the two lots go in here for this target down here. That stop gets moved to break even. All right. Now, in this case, I could actually move it down to here because I got a support there. So I can move it to there and I have an even tighter stop. If the trade goes to target, all right, then this trade up here will make 84 down to 12. All right. So 65 pips. All right. So trade one will make 65 pips. Trade two will make what? 40 pips. All right. Times two. 80 and 60 is 140 pips. All right. That's what you're looking for. You're not looking for 5, 8, 10. You're looking for hundreds of pips. All right. You start making hundreds of pips, guess what will happen? Your account equity will grow. All right. You can't grow in your account with 5, 8, 10 pips. It's like it is impossible. It is impossible. Why is it impossible? Because if you're doing that, you got to be right 90% of the time. In order to be right 90% of the time, you are the greatest trader on the planet. And if you are the greatest trader on the planet, what are you doing here? All right. So don't stack the deck against you, which is 90. If you scalp, you got to be right 90%. You got to win 90 out of 100 trades. You can only have 10 losses. That's all you can have. 10 out of 100. Now, a bank trader, all he has to be right is 65% of the time. A good retail trader is 65 to 70, 75, maybe if they're lucky. That's a good retail trader. That means at 65%, they lose 35 out of 100 trades. Get that through your head. If I get to be a great trader, I'm going to lose 35 out of every 100 trades. Can you handle that? A lot of people can't. And the reason they can't trade is because of the emotion. All right. It's their risk tolerance. It's not that they can't do it. They can. Anybody, my opinion, anybody with average intelligence can trade because it's about following rules and it's pretty simple. All right. Learn the rules, live with the rules, let the charting software show you where we're going, and it becomes easy. All right. Especially if you're world class at something. So if I'm world class at something, yeah, I can really make money. All right. So the first thing to learn is polls. All right. Polls, and then more polls. All right. Just go over here. These are QL charts. We give you these charts on your charting thing so you can do your work over here and not mess up your trading charts. So we'll just go up here to the dollar yen. I'm going to go down to a 60-minute chart, and I'm just going to show you how many flags do they do. All right. Pullback. I wonder if I should learn flags. I don't know, Scott. The market never does them. I don't know why you'd learn them. What else does it do? It does pullbacks. Pullback, pullback, pullback. That's that. What if I could become world class in those two things? It takes 100 hours. If I could do that, could I make money? Yes. Do I know it all? No. And the better I get, the easier it's going to be to trade these things. The more I know about the market, the more I know how it actually moves, not what I think it does, the better I'm going to trade. So, do this. How do you eat an elephant? One bite at a time. All right. The forex is an elephant. How am I going to eat it? One bite at a time. Flags, then pullbacks. Right. Well, pullback. Could have traded that. Pullback. If it goes, I could trade that. Gee, that would be sweet. In fact, that's what we're doing right now. We're in that dollar yen. All right. So there you go. So here's what you want to do. You want to, at first, you're going to work on flags. All right. And what you got to know is how they work. Okay. You can go to chartpatterns.com and see it. However I came into the flag is how I'm coming out of the flag. All right. Whatever that is right there is most likely what that's going to be. And many times it's to the pip. If this is 62 pips coming in, it'll be 62 pips coming out. I use two monitors and the laptop, but I never use my laptop at all. I always plug it into two monitors there. You can get away with one. I do it all the time. All right. Now, once you learn that and you got that down, and how do they happen? They happen with a break, hook, and go. All right. Overwhelmingly, they break, hook, and go out of them. I'll prove that to you. I go up here to the website and I go to chart patterns, which is the second thing bookmarked here. Here are rectangles. What do they do? You can see clearly that if you came in going up, you're coming out going up with a break, hook, and go. You came in coming down, you're coming out of there with a break, hook, and go. See, that's statistical probability. All right. So that's where you start. Okay, that's what it does. Can I prove it? And then you go into the charts and you do your work until you prove it to yourself. All right. How many images does it take? 300 to do that. All right, so once you've done polls, then it's a really easy thing to do bear flags. A pole is a flag. I mean, a rectangle is a flag. Then it's real easy to do bear flags. Bear flags are like this, typically with an A, B, C in it, all right? However you came into the bottom of the bear flag, whatever that is going to be equal to that coming out. So whatever that is right there, that's what this is going to be right here, all right? How do I trade it? Wow, I'm a bear flag trader. Trade 1 is at the top, trade 2 is at the break of the bear flag, and trade 3 is the break of the support of the bear flag. 3 positions at all times, all right? Then I go and say, okay, now I'm going to do 300 bull flags, all right? So bull flags are like this, coming down, typically with an A, B, C, right there. However I came in here is where I'm going here. See, it's all the same. Could I do 300 of those? Yes. Could I do 300 of those? Yes. Could I do 300 rectangles? Yeah. Could I spend 100 hours doing bear flags, which is what pullbacks are typically, or bull flags, right? Wow. 100 hours is only 2.5 weeks, folks, if you did it eight hours a day. Wow. So there you go. Kind of crazy. All right. Auto scale that. Back to the end. Are you going to do anything? Here we go. Well, we're moving. I'm positive. There we go. Breaking in this. Remember, trade 2's coming in under here, or under here, under the wick, right there. 61, 60. I put it at 60 for that target. All right. Trade 2 with 2 lots. All right. How many are in dollar yen? If you're in dollar yen, put a Y in there. Dollar yen. Scott's in. Anybody else? Chris, anybody else? Rob? All right, Trader Joe, Stephen. Okay, so we've got plenty of traders in it. Don't forget tomorrow. Can you divide a monitor screen in at least 4 charts? Well, they come like this. They're already come. It's already set up for you, Savitri. Already set up. Just pop it up there. And they're all right down here. So you just need one monitor for this, right? And then, like I said, you could put your other monitor, you could put your other one. Now you can always replicate one of these, or you could when you have it, you have two versions of it. So you could open up another one and put it on the other screen with a different currency on it. You could do that. Yeah, we will, Joe. We always do. All right, so this is a live trade. Oh, look at how sweet. White dot just came in. What does that mean? That means that an arrow and a painted candle occurred on a 60-minute chart. That means a slug of money came in on a 60-minute chart. All right. Well, why do we care about that? Because the bankers enter and exit on the 60. All right. Now we bring this down. I'm on a 10-minute chart, but this is from the 60-minute chart. Can you do it on MT4? Nope. Can you do it on TradingView? Nope. That's why we had to build our own charts. Let me do it on a currency I want. Okay, so you just take this chart, go up here to, I don't know which one it is. Replicate. You replicate, boom. Now I have an extra chart here. All right, so let me bring it down here. I can get to it, make it small. Got to resize it. Just hit replicate. Come on. So now I got a replicate chart right there. So I'm going to change this to the US dollar index, USDX. And there we go. And now I got the USDX side by side with it. So now I can watch this chart. Right here. This is right over. Right here. Now I can watch the dollar side by side with the yen. Should I be selling? All right, let's take a look at this. All right, what does the chart say? All right, what is the chart telling you? It says, by the way, you got sellers in. Big money's selling. 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 I wonder if they're trying to sell and go down with $1. All right. Do we trade that? No, we don't trade that. That's a piece of information. Does that make you more confident when you see this one? What are they trying to do here? They're trying to sell it. They're trying to sell it. You see how the chart is giving you information you can't get any other way. All right. How's your confidence on, oh, I'm in this trade. It's not moving very much, but they're trying to break it to the downside. I can see that I got a big support here. That's what they're trying to break. All right. See that? That's a dollar index. That's there, side by side. All right. All right. So I could bring this over to my other monitor or whatever. No, I can't do that. I got to leave it right here. Sorry. I thought we could. All right. There we go. All right. What about AJ? You gonna give us anything this morning? Look at that. Almost tagged it, but didn't quite. We don't have 55 pips, so we can't trade this. We live with the rules. Right? We live with the rules. Euro Aussie. Right? We're waiting for the breakout up, not giving it to us. Euro New Zealand. Waiting for the sell to the downside. And see, this doesn't make sense. Euro Aussie is correlated with the Euro New Zealand. So Euro Aussie and Euro New Zealand should be going the same way. Euro New Zealand says we're going down. Euro Aussie says we're going up. Oh yeah, Mike, there's a whole course on it. Yeah. When you become a demo trader, you get access to all that. It's in the academy. Let me go pop it up here. Go to the website, log in, academy. So there are 15 courses in the academy here. So you would start off here at the bronze level. All right. So this is these are all courses you can watch. Okay. You get down here in the bottom, software right there. And there are tutorials on every single thing. All right. There we go. How to add a dollar index to the chart. Go down here, you go to all these little things here, download and tutorials. All right. So here we go. All right. This first one is a walk through the charts right up here. We'll walk you through the charts right there so you can know what all the pieces are. All right. This is how to access the academy. Why do we use for these charts? There's the downloads for the software. All right. Installing your charts is a video on how to do it, how to research your charts after download. All right. What you need, you only need these little things right here. You need to change the data feed. Sometimes you do. We have 2 feeds. So, all right. Just on and on. Our T30 is all about that. The HSI tool, the HMI, the PAT projector, the PATO. All these are little short videos, right? MACD and T3, all right? How to change the tool, Heikin-Ashi charts. Lots of stuff in here, right? All right. So there you go. All right, is there a tutorial? Why the black candles? The black candles simply tell you that you had a change in direction. It hits the moving average. If it hits this moving average, it gives a black candle. All right, that's a heads up. All right, so when you're looking at it, you're going, I'm looking for it to come down. I'm looking, oh, I just hit the moving average. Oh, I opened and closed 2 candles below the moving average. What am I now? I'm a seller. All right, understand how moving averages work. All right, now we have very special ones here. In fact, the settings for ours are locked up in our lawyer's safe. But a moving average is, a static moving average is like this, 1 to 10. A static average is always 5. It's the average of 1 to 10. It's always 5. But a moving average cuts one of these off and adds one, cuts one off and adds one. So a moving average follows the candlesticks, all right? Now, when you're below a moving average, you have more sellers than buying. When you're above the moving average, you have more buyers than sellers. You just look in here and you can see that. I got more buyers than sellers. I got more sellers than buyers. I got more buyers than sellers. I got more sellers than buyers. Well, what does that give you a heads up on? You got more sellers than buyers. And who prints these candles? Only bankers. So I got more bankers selling than I got buying it. Do I want to buy it? I don't want to buy it. Now, on our charts, all right, you're going to see something pretty amazing. All right. So by the way, when I'm on a 10-minute chart here, the only thing on the 10-minute chart that comes from the 10-minute world are the candles. Nothing else is from the 10-minute world. MACD is a 30 or 60. I can't remember. All right. Up here, you'll see this red moving average. That's a 240 moving average brought down to the 10. Can I do that on trading view? Nope. Can I do that on MT4? Nope. So on the 240 world, that's where bankers trade. I have more sellers than buyers. This green one is the 60-minute moving average. I'm below the 60-minute also. Who trades the 60? Bankers. All right. Therefore, the bankers are selling. All right. Now, I also have two more moving averages in here plus a T3. The T3 and these two moving averages are from the 30-minute world. So I'm below the T3 and I just dropped below both of these. All right. Moving averages. So what have I got? I got sellers. I have nothing but sellers here. What tells me that? The chart tells me that. The chart is designed to tell you what you are, where you're going, and where to move your stop, and where to add positions. All right. That's what the chart does day in and day out. Now you're in charge of putting the lines on. Otherwise, it's a blank chart. We could do that actually. We got a few minutes. It's getting late in the day and we're not getting anything. All right. Oh, there's Jerry. Hey, Abdul, there's a message to you from Jerry. If you could answer that. Jerry, you're welcome to talk.
Hey, Abdul. Hey, everyone. I just wanted to pop in. I've been checking in and out. Looks like everybody's getting after it. The day is about to finish up. I hope you guys had a great session. I'm just trying to stay on top of support, keep everybody happy, keep everybody in as we get new people joining to take a look. Definitely want to spread the word. If you got friends that you think might want to see it, tell them about it. Give them the link. Tell them to go to ProAct. We'll get them a link. They can get in on the training. It's going on this week and next week. So just get after it. You can always share the.
I'm going to go do, Jerry.
Yeah, you can share the IC. You can always share the IC with anybody and everybody when we give it away. So you click share now and it will let it happen. So if you don't have the IC, you just send something asking for the IC to support@proacttraders.com and I'll get it to you. Hey, good morning, Erica. Everybody have a blessed day. Get out of here and keep doing what I'm doing. Abdul, shoot me an email. When I've responded to your emails, Abdul, they've bounced. It's the info center. Show them what the info center is, Scott. It's the tool you're looking at that Scott has. It's also the access to the meetings and to everything. It's kind of it's a control center of sorts. It will minimize down to just be like an app on your desktop. It'll install on your phones, on your iPad, on your charts won't run on all that, but these all run. The info center will run on anything. It's a browser-based, web-based app that I wrote that gives you access to all these. The risk calculator is a very cool tool that everybody could use. Anybody and everybody can use it. It's not restricted. We allow anybody and everybody to have it. So, anyway, that's what you.
Yeah. Go ahead.
I'm going to get out of the way. Y'all have a great day.
All right. So risk calculator, you put your account size in, and you never more than 2% right there. What your stop loss is, you can, I use 33 just to figure this out. So if I want to trade the pound yen, I can trade 17 micro lots. Okay. Now, what if I want to say, well, I'd like to trade minis? I go up to hit minis and I can trade 1.75, which means I can't press my winners with 1.75. All right. So I have to trade it with micros. Now I can trade 1/3 of my lots, which would be 5 lots. And then I could trade the next one with 12, almost 13 lots on trade 2 on micros. All right. If I want to know what the price per currency is, it's all right here, right there. It tells you what it is. All right. That's what they pay. All right. So that's a pretty cool tool. Oh, wait a minute. Let me pull that back up here again. All right. So back to, hold on. Return the risk calculator back to main menu. All right. The alerts come in here. All right. So there's where the alerts come in right there. You can, if you're a subscriber, then you get those. All right, they come out 4-day at night. This is how you check into the room. All right, today we're in New York. You just click there and it takes you right into the room. There's 4 meetings that we do weekly. All right, not the fast track, but there we go. Must see videos is pretty cool because that's where we put the session recap every day, right there. There's an alert recap how to do it. Here's the session recap from yesterday, right there. You don't have to go hunt for it, you just go right to it. All right, and there we go, back to main menu. And then down here, you got a cheat sheet. So you're going to have a fundy. What's it do? All right, so you pull it up right here. Here's a cheat sheet. All right, if it's core CPI, it's tradable if it's a 20% difference in the deviation. The typical range is 50 pips. Is that good? Would that be nice to have? Wouldn't that be nice to have? Well, you got the IC, you got it. All right, so there we go. And oh, where did it go? Pull it back up again. All right. And back to the home page. All right. Then you got links here. Fundies are right here. Options are right here. The blog is right here. A link to the academy. There's risk for reward. Correlations. You just pull that up and say, I don't know my correlations. Okay. Guess I'll pop it up there and save it off. There they are right there. See? So it's a pretty cool tool. It's, even if you're not a subscriber, there's going to be lots of information you want to add to it. If you're a subscriber, you're going to get the alerts every day. And there's 4 of them a day, and sometimes they work, sometimes they don't. But traders are, if they're on top of it and they get them, they make a lot of pips. All right, we're pushing on through. Not doing well here. Let's see, dollar yen. What's going on here? Yep, they don't have enough sellers. All right, so they don't have enough sellers, so they're going back up to find sellers. All right, so they couldn't break this, so they're going up to do that. Who's doing that? Market makers. All right. Now, what do they typically do? When they get up and find seen sellers, they're going to close in reverse. They're going to close this buy that they took to get up there and enter the sell with the exact same lots. All right. So if they're trading 20 standards right here to the upside, as soon as they go close in reverse, they put 20 standards in the bank and they flip it, and they got 20 standards going down times 1,000 banks. You had it with the UJ. Yeah, it can be nasty. All right, can be. All right. And we possibly have a cup and handle, so don't forget that. We're still under the channel. All right. So what do the moving averages tell you? We're in between the moving averages. See this? Here's the red moving average. Here's the green one. All right. I got more sellers on the green one than the 60-minute, but I don't have more sellers on the 240. See, what does that tell you? All right. Tells you we're not quite ready to go yet. But MACD says anticipate the sell. The breakout said we're trying to do the sell. The MACD says anticipate the sell. Right? See that? And then we can use all these things down here to feed us information. All right. So we can go look at them and say, okay, well, what's going on here? Okay, yeah, they're trying to go down, but nobody's interested. The order flow is definitely to the downside, but they haven't turned to 60 yet at all. All right, this is still going down. This is going down. This is going up on that up move. That's a 5-minute inside of 10 over here. Right, so you can see it's going up. All right, so then if we get in this trade, we'll use the confirmer. That's this trade. If you got into the trade, you'd be waiting in here, you get into whatever you do, and as it continues down, it shows you, yes, it's sustainable. Yes, it's sustainable. Yes, it's sustainable. And big moves, we're going to catch every move right at the bottom. Look at that. Up, 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 up. Now, we don't trade those. That's not an entry for us. That's not an entry. We enter our normal trade setups. But this tells us how to stay in. Stay in, stay in, stay in, stay in, stay in, stay in. Why? Because we want hundreds of pips. I don't want 10. All right. So there you go. All right. So what's it telling us now? We're trying to push down. All right. We're trying to push down, but we don't see on Heikin-Ashi. Let me make them big. Heikin-Ashi charts. All right. When a candle forms again after the first one closes, it always opens at the halfway mark of the previous candle's body, the halfway mark of the previous candle's body, the halfway mark of the previous candle's body. All right. So that means that when you get a wick, you've had a greater than 50% retracement. All right. What does that tell you to do? Move your stop right above the last whole candle right there, and you hold right there, and maybe you pick up that, maybe you don't grab it, and it comes back and stops you out here, but it stopped you out with that profit right there. All right. What is it designed to do? These charts are designed to show you a great trade, keep you out of a bad trade, and keep you in a trade that's got lots of upside potential. Keep you in it so you maximize those opportunities. What would that do to your trading? What would that do to your trading to maximize whenever you get a winning trade? What if you maximize it instead of making 10 pips, you made 200? What if you made 60? What if you made 55 and that's it? All right. Well, your equity curve is going to go up. That's all there is to it. All right, we're at the 10 o'clock bump, 11 o'clock bump. What's the 11 o'clock bump? That's when the barrier options expire. All right. So once they expire, if they were close to an option contract, they won't move it because it's going to go the other way if it hits. But now that that has expired, they can go the other way. We don't know where barrier options are. We know where the plain vanilla are, but we don't know where the barrier options are. How do I find that? Okay, back to the home page, and I go down here and it says options. I click right there and it takes me here to the options. It tells me here they are for today. I click on it, pulls up a little Google spreadsheet. I pull it up, and there it is. Here's today. Dollar yen. We had a $691 million one at 146.45 and $1.1 billion option at 147. All right, where are we? We're at 147 is all the way down here. See, right there. So they didn't get it. All right. So there we go. They didn't get the 85 either, it looks like. Oh, yeah, they did. See, they went down to 63. So they got that 85. Let me get it right here. Oh, wait, it's not that. Hold on. 146.45. Oh, no, it's even lower. So they didn't get any one of them. All right, so now we can go. Right? We got a big wide open space. All right, what's the problem? It's the dollar yen. When's the dollar yen going to move again in the Asian market? When is that? 8 hours from now. Do I want the dollar yen now? No, I'm in the dollar yen now. What do? I leave my trade alone. I leave my entry order in and I watch it and I watch it. And if it can't move and go down in that area, I take it off for break even. That's what I do. All right. They're going to keep making moves to the downside. One of them may go, but if they don't, take it off for break even. Major in risk, never major in reward. All right. Thomas, the EA pulled back to the 618. EA, there we go. All right. Back to the 618 with the bounce off the S3. 3 times on the 60, broke down with MACD turning over to the downside. There you go. All right. Now remember, we had this up only because the chart set up. But remember, I kept telling you, always, this doesn't make sense. It doesn't make sense that they're going up if the Euro New Zealand is going down and the pound New Zealand is going down. All right. So we'll adjust this now. All right. So I'm going to get rid of this so I'm not biased to the upside. All right. And I'm going to leave that on. And I'm going to take this off because that's to the upside. Let me get on it here. All right. And there we go. All right. So MACD is rolling over to the downside. All right. So that means this is most likely the 10 on. Now it's getting it. Look, it took all day to get into sync. Took all day to do that. Heartline proved, heartline proved, heartline proved, heartline proved. See that? Got to prove that heartline. Otherwise, I don't know if this is real. I know this is real because it comes off 2 actual touches, but there's no touches here. All right, I'm going to get rid of the ATR. I'll look up what the ATR is on that. Euro Aussie. All right, 109 pips. All right, because 118 normally. See, so remember that if you have a target slightly further, it can do it. Okay, thanks, Larry. All right. And let me go ahead and put the ATR on. What did I say it was? 109 pips. Okay. 109 pips. Find the 5 o'clock candle over here. And we put the high in after that. We're going down for 109 pips. 109. And there's a sell. And there's a target. We got 55 pips. I need to find fibs inside that. Swing high, swing low, swing high. All right. This is the only place I'll move my stop. At the 0618 and the 1000 en route to the target, and I'll hold for the 1.618. Right. Yeah, right on it. 1000 is, it's right on. No, not from that one, it doesn't. Right here, it's above it. 1.618 is right there. Let's see if I take it up to here. It doesn't change it any. I still get 1,000 there. All right. I like that one, but it doesn't change if I use this one. See, if I go up here, it's still, oh, it's below it now. I see it. And now it's below it. Okay. Look up Larry's Telegram post. That's K. Oh, there we go. Oh, it's private. I got you. Okay, there we go. So that's what Larry had this morning. See that? Nice. There you go. Good work, Larry, as usual. Okay. So now it's making sense. It did not make sense this morning at all, but now it's making more sense, right? Because I got a channel, I can use the HSI. Why do I use the HSI? Because it finds the Elliott wave targets, all right? So if they're going to channel or trend, they're going to try to do Elliott wave. Well, are they doing it? Are they doing it? Are they doing it? Yep. So here's the next Elliott wave end of this wave. What's the wave structure right now? The wave structure is for a one, come on, a 1, a 2, a 3, a 4. 4 did not go into 1. We're in a fifth wave to the downside, folks. All right. Fifth wave to the downside. Now, typically the third wave and the fifth wave are the same size. How do I know that? Because I did 300 Elliott waves. All right. That's how you know it. That's how you learn it. You don't learn it because Scott said it. That doesn't make you learn anything. All right. You learn it because you do it. All right. So we're in a fifth wave to the downside. All right. So I'm going to go ahead and I'm going to leave that on because they're using them. Once you see they're using them, just use it. All right. So now you see the opportunity has totally changed to be this. All right. So trade 1 is here. Trade 2 is here. Fast trackers will trade 1, 2, 3 positions there. That's what fast trackers will do. Everybody else will trade 2, entry order and a market order. Fast trackers, market order, entry order, entry order, entry order to the downside. All right. And so you accomplish this, you make 150 pips. They accomplish this, they make 220. All right. Same trade, just different methodology. All right? Same exact trade, but none of it's 5, 8, 10 pips. None of it. The only way we get 5, 8, 10 pips is if we got stopped out. Waiting. All right. So now that makes sense. You're in New Zealand. We're trying to break, not yet. Okay, now we can trade an Aussie and a New Zealand. If the pair has an Aussie and New Zealand in it, we can trade it now. I can't trade a dollar yen. Why? Because it's an Asian currency. It's not going to move to the Asian market. I can't trade the pound dollar. Why can't I do that? Because in 20 minutes they're going to close down London and they're all going to the pub. All right. So those trades I can't trade at this time. Time of day is against me. But New Zealand's and Aussies I can because the next session is the Sydney. It may start here, but it may finish in the Sydney, which is 4 hours away. All right. So at the end of the New York session, we are only interested in Aussies and New Zealand currencies. I don't know why Trader 1 made X amount of pips in Trader, because it's where you put it in. Right. So remember, all right. So in this case, it'll be here's the trade. Right there, all right? Trade 1 is here, all right? Trade 1 is here, trade 2 is here, all right? There it is. All right, now remember, trade 1 has only 1/3 of your lots. Trade 2 has 2/3 of your lots, all right? So trade 1, if it goes to target, makes 30, 45, 60 pips, all right? That's 60 pips to the downside right there, all right? So it makes 60 pips on trade 1. All right. Trade 2 makes 45 pips, all right, times 2 lots. That's 90 pips plus 60. That's 150 pips. You see how that works, Erica? See? That's why trade 2 is always 2 lots. Trade 1 is never more than 1/3, 1 lot. Now, so whatever your account is, you take your account and you multiply it. So let's say you have $1,000 in there and you multiply it times 2%, all right? That's the most I can risk today. 2% of $1,000 is how much? $200? No, it's not very much. I don't know how much it is. What is it? 2% of $1,000 bucks. One of you math guys come up with it. How much is it? One of you math guys or girls, 40. 20. Okay, now we got a problem. We got 20 and 40. Uh-huh. All right, Trader Joe, change your chat to everyone so that everybody can see it. All right, everybody, change your chat to everyone. Hey, thank you. All right. All right, let's just say it's $100. Makes it easy to figure. It's $100, okay, which means I can risk 3 minis with a 33 and a third pip stop. All right, so basically 100 pips is what I can risk. All right, so with 3 minis in there, my first trade is 1 mini. My second trade is 2 minis. See? Now, remember, I'm making the money on the leverage money, not on what I risked. All right, so I'm going to make the money on what I risked, what I made based on the leverage. So that's how you make money. That's why we trade the forex, because of the leverage. Right? So there we go. I don't know what it is. It doesn't matter. It still comes out to be divide whatever you can trade, whatever your maximum amount of money today that you can trade, divide it by 3. Always trade only 1/3 on your first lot, stick your foot in the water. And then if it continues, always plan the second trade. If it goes, you're in. If it doesn't go, you only got 1/3 of your lots at risk. If it goes against you, you take a loss on only 1/3 of your lots. Now, your first trade is 3 times the stop. All right. So you never let it go back there. All right. So what you have to do is when you make a trade is you find the bailout zone. Where will I bail if it doesn't go? All right. If I get into the trade, I'm headed down. Right here, I'm going down, break hook and go, I'm headed down, and it comes back up. It can come up back up here and make the turn down. But if it ever breaks this to the upside, I exit. Well, where will I exit at? Right there. What do I lose? 6 pips? 5 pips? See, that's a low loss, little loss. All right. 98%, I'm just guessing at the statistics. 98% of retail traders do not have a bailout zone. All right. I had to devote a whole chapter in my book. Right, so I wrote a book called The Empowered Forex Trader. There's a whole chapter on it, on why you have to have a bailout zone. It's crazy to me. The traders don't do it because they don't major in risk. They're looking for the reward. Where's the reward? Where's the reward? Where's the reward? Well, don't want to do that. Where is that? Hold on. Well, I can't seem to put my finger on it right now. So there's the book. It's on Amazon if you want it. Right there. I make a whopping $7 if you buy it. So it's not, I'm not here to make money off this at $7. I'm just here to provide a resource. So there it is. I go through all this stuff. You can have it. It's in a Kindle form, so you can blow up the graphics on your iPad or Surface for whatever you're using. So there you go. It's on Amazon. Anyway, there you go. All right. Well, there's not much happening here at all. We're not going to get anything this morning. And what happens to traders, retail traders have a retail mindset. The candles are moving, therefore I must have missed a trade. No. We're in the dollar yen, 6 or 7 of us, that's all. We're in the dollar yen, but it's not moving. All right. It's just not moving. All right. It showed sign it was going to go. It's not moving. What do? I leave my entry order on in case it goes. I leave that on. And I watch this. And if it keeps not going, I get out of break even. As soon as I get break even, I get out. I'm up 2 pips right now. Whoopie-doo. All right. So I'll hold it just in case it breaks. I'll watch it, and I might watch it for an hour. And then at the end of the hour, I'll just go, okay, this isn't working. Get rid of them. All right. Take it off. All right. I'm going to do a session recap here. All right. All right, so this is a session recap for 7th day of February. It This morning we were watching as the dollar index broke out after a double top, which they needed because they put the money in twice. All right. So there's the first money came in, the second money came in, first money came out here, second money came out here, and now they're good to go to the downside. We're doing a sideways move, a flag pattern. MACD is below the zero line break. We're looking for that move to the downside. That's what we're looking for. All right, so we're going with dollar weakness. Why? Because the chart says that. Yeah, but the bulls are here. Oh, yeah, but I got a flag pattern. What is a flag pattern? It's a continuation pattern. Oh, I didn't know that. Go do 300 flags. You'll know it. All right, euro dollar. That means it should go up. And what is it doing? Going nowhere, just a sideways move. We don't have 55. We have 55 pips, but we don't want to trade at this time of day. Target is up there at 108.28, right up there. And ATR on euro dollar, pull this over here, is, there we go, euro dollar, 69 pips is all. Pound dollar, all right, pound dollar, halfway to target right now. Dollar keeps going down. This should make it, all right? By the end of the day, remember, the ATR is the day chart candle before it happens. Yesterday at 5 o'clock, it predicts that the start of the candle will be here and the end of the day chart candle will be here. That's what it means. That's why you use it, because that and the MACD are the only two things that can tell you any semblance of what the future is going to be. The only two. Everything else lies to you. In fact, if you do a study on RBIs, RSIs, or slow stochastics, you're going to find out that they only work 50% of the time. That means they lie to you 50% of the time. So if you got them on your charts, get them off. Get them off. Right? That's correct. We do not trade like that. No way. And in fact, no professional trader is at Forex Factory. None. They would not be there in a jillion years. Right? So you're over there with a bunch of crazies. Right? Pound dollar. 87 pip ATR, just 2 pips off of Fibonacci sequence number. Target is up there, would hold for 76.86, okay? Over to dollar Swissy. We don't trade any of the Canadian currencies because no retail trader should trade them. All right, dollar Swissy to the downside, got a low ATR, it's only 67 pips. And we got this left, but we don't have 55 pips when we break out, so we can't trade it. But the target is still down there at 86.63, holding for 86.50 down there. Over to dollar yen. We are in this trade live, waiting for it to go. It's just not going at all. Oh, I forgot to put that on there. Hold on just a minute. Thought I did that. Live trade down. Don't forget, if you're in the live trade, remember what it is tomorrow. Right? Wherever you are, remember you were in it today. There's the opportunity down there. Target is down there at 147.10, holding for 147 even, and 117 pip ATR. Pretty decent ATR. Aussie yen, low ATR. We're not going anywhere, just doing a flag pattern to the upside. All right. We are above the zero line break, but if the dollar flips, it won't take much to flip that down. The Aussie dollar has a 55 pip ATR, so it's virtually impossible to trade. All right, euro yen. All right, euro yen headed to the downside here, and waiting for it to see if it goes. MACD pointing down. See where the white dot on top. White dot on top. What's that? Big boys are pushing it down. That's all. That's the information. That's all it means to you. The big boys are pushing it down. Where are we trying to go? All right, where is my target? Get up here in the 60, and we had it up last night, and I didn't redo it because it already did too much of its ATR. We couldn't trade it down. So wait for 5 o'clock. You're going to get a new ATR down in this area somewhere down here. We're making lower highs. This channel is holding. This one is gone. The bailout zone from yesterday's live trade is gone. And I'll get rid of that. There we go. And I'll get rid of the bailout zone. Come on. There we go. All right. So get rid of that. So after 5 o'clock, you get a new ATR. Look for this area down in here. And euro yen has an ATR of 112 pips. All right. Pound yen also making the turn. It also went up last night. Okay. So we did, 9/10 of its ATR during the night. That's why we couldn't trade it this morning. If it's already done its ATR, it's not likely for it to do it twice. All right. It's possible, but not probable. Get rid of some of this stuff. I could have done that while we were in class, but there we go. All right, so you got to wait for 5 o'clock to get a new ATR to the downside, somewhere down in here. And pound yen, big ATR of 122 pips. All right. New Zealand dollar, right? New Zealand dollar trying to push up to its target, not getting any traction whatsoever. We do have a break hook and go, and only 32 pips left. The target is 61.50 up there, and New Zealand dollar has an ATR of 54 pips, all right? So you virtually can't trade it at all. Aussie yen. We waited all morning for this to see if it would turn. It did turn, but it didn't get up high enough for us to get 55 pips, so we walked away from it. But we'll get a new ATR after 5 o'clock. So watch for that ATR wherever that's going to be. Wait for 5 o'clock. Don't trade it now. You don't have 55 pips, but after 5 o'clock, you will. All right. Aussie yen has a 66 pip ATR, so you're going to have to get it in the first, 12 pips in order to keep 55 pips in front of you. So watch for that down in here. All right, Euro Aussie. Euro Aussie, waiting for this all morning, trying to get it on. It won't break this bottom. Our target is down here actually at 6,400. ATR is at 6,407. Euro Aussie has an ATR of 109 pips. We need to break this bottom before you trade it. Then there's the area, right? And after 5 o'clock, you're going to get a new ATR, which will be down here near the S4. So it's an even bigger thing. If it doesn't go before 5 o'clock, this is your trade after that. Right now, it's only here, but it's going to be here after 5 o'clock. So it'll be worth waiting for that. That's for sure. Pound Aussie. All right, Pound Aussie almost got the target, just missed it by a couple of pips there. All right, so nothing for us to do at this point in time. Pound Aussie should be making the turn, but we don't have any confirmation of that yet. So we're still going with the up move, which is nothing for us to do. 109 pips to the upside. Euro New Zealand. All right, Euro New Zealand waiting for them to break the bottom. All right, we're at the range bottom. They certainly recommend know where it is. The target is down here at 75.32, and if it doesn't go, you'll get an even deeper one down here after 5 o'clock. Euro New Zealand has an ATR of 124 pips a day. So after 5 o'clock, look for 124 pips to the downside. Pound New Zealand, nice little channel to the downside. They are respecting the range. They could easily bounce to the top. So we don't trade into the range bottom. We can trade to the range bottom. We don't trade into the range bottom. And once we hit it, we can't trade it until we break the range bottom to the downside. All right, because the range bottom is the bounce point, and it could just as easily go up. Target is down there at 205.72. You'll get a new ATR after 5 o'clock. Pound New Zealand has an ATR of 135 pips. New Zealand yen right up to its target, to its ATR, no problem at all, to the pip, and they exited. Done. All right, New Zealand yen has an ATR of 58 pips, and they did it exactly right there. All right, can't trade Aussie Swissy or Aussie New Zealand because the ATRs aren't even 40 pips right now. But Pound Swissy easily went to target last night and then put an extra 20 in there. So that means Pound Swissy's ATR is going to rise. It's 57 today. It'll probably be 62 tomorrow. All right. If dollar keeps going down, watch for this to go up 62 pips up in here. We watch 20. All right. We trade only 1 or 2 a day, but we watch 20. And the reason for that, it's a great question, Erica. So let me answer that a little bit deeper. When you watch 20, you get to feel for the correlations. Once you know your correlations, you know which currencies move together. And if they're not doing it, that gives you a problem. If you don't have those currencies, you don't have no clue. All right. So we watch 20 currencies. We rarely trade more than 2. So every once in a while, we'll get 3 trades on, but it's really rare. All right. When we do get a trade on, it's also rare for it to finish in class. Why? Because we're not here for 5, 8, 10 pips. We're here for 150, 200. All right. And it takes longer time to do that. All right. That's it. So, yeah, we're watching 20. And then, we also, you can trade cryptos, anything. Let's go see what Bitcoin's doing today. All right, here's Bitcoin. Bitcoin's going flat, sideways. All right. What's the S&P doing? You can trade S&P off our charts. It's going sideways. What's the Dow doing today? It's going it's going up a little bit right there. See? And you can add as many of those as you want, as long as we got a feed for it. Right? So cryptos, we don't, there's 90,000 cryptos. We do about 30 of them, the main ones. We don't do them all. To come out with a new one today, we won't have it. That's all there is to it. All right. All right, there we go. All right, anybody got any last minute questions? Any questions for traders? On the website, they're in the academy. Everything's in the academy right here. You go to the academy, you log in. I don't know. All right, if you take a demo, you'll get a login. You go here, and you'll see down here, New York session recordings and recaps, so right here. So you'll have two of them. You'll have the first one will be here, all right? And let's go right here, live room session. And this will be, here's the yesterday's, the whole, this is being recorded. So this recording will be above here in about an hour, all right? Then the recap will be right here in about an hour. It takes about an hour to render them, then I put them up. It'll be right there. And there you can watch them all the way there, way down, right? It's what we do every day, all right? So going back to 2023, right there. All 23 and 24 right now. I guess I could get rid of those, but I don't know. You can watch a couple live trades down here, see how we did it. These finished in class. So when they finish in class, I make a video. I cut them down to 8, 10, 20 minutes, sometimes 30 here. This took an hour and a half, but I cut it down to 30 minutes. So you don't have to sit there an hour and a half and watch the paint dry. All right. So you can watch it. All right. There we go. All right. Fast trackers. We need to go to market analysis this morning. Fast trackers, market analysis. Yes, no. Let me know. No, Thomas. No, Robert. Anybody else? Okay, no. All right, we won't go. All right, everybody, have a great day.